Hey there. So Sam back with you here for an update here and just kind of follow up on this new series here that I'm trying to place the emphasis on the advantage of staying entirely within TradingView. Now, the order execution in here, for some reason, I just get the impression that nobody's using it or is aware of it or has really experimented with it 'cause it's so damn good. I would tell you it's as good, if not better, than anything that's on the market in terms of order execution, particularly here in Forex. It's really easy, and I would tell you it's easier than MetaTrader 4. So let's just look at it. Now let's say I'm going to assume you don't have any positions in the market. You've come in and you've got some time, so you're going to do some analysis, and you would start here and say, okay, which currencies are strong against others that might be weak. I'm sorry, guys. All right, so we look here. So particularly times that I want to be looking here, either I can see something that's been at an extreme that is now correcting, or I want to look for areas of crosses. Well, let's look at both. So I can see right here, you can see the US dollar is always in green. Right, so the dollar to the Canadian was at an extreme. Now, this is, well, I've got a 4-hour up here. So I've got an extreme between the dollar and the Canadian. And now we can see they're moving back towards each other. So maybe I'm looking at that and I go, all right, let's go take a look. Well, I'm going to go back up. Well, let's see. I'm going to go over here. Where do I keep them? Okay. Remember, because I move them around as I'm showing you guys. Okay, so I'm over here to my big 8, the main 8 plus gold. So, I should say the main 7 plus gold. I'm like, okay, that looks interesting. So let's go take a look at the dollar Canadian. So remember, you got to highlight it and then pop it open. Now, I don't really want to do an analysis here. I just want to show you about how to do an order entry. So this is a 1 hour here. So for whatever reason, we're sitting at Vegas Wave. We've had a 38% retracement. I don't want to get into an Elliott count here, but just say you're interested. You're thinking, I like this. Maybe we've hit support. We're right at the Vegas Wave. I want to be a buyer. I'm looking for that move. All right. So now again, I get the impression that people don't know this is down here. So if we bring this up here, so let me log out. I've got some filters on here. So let me. Let's see if I go to paper trade. Yeah, let's go. Okay, so if I'm clicked on paper trade, but let me just log out here. So let me disconnect. So these are your choices, right? So this is, now we've developed a relationship with Forex.com, so we'll get to that. But right now, I just want to assume that you guys are still new. You're still learning Forex trading. So I want to encourage you to use the paper trading, right? Just as get used to the order entry, execution, stop management, targets, etc. Okay, so we're just going to click on paper trading. Now, since I think it'll just connect with your TradingView username and password. I'm not positive, right? So I've had it for so long, I can't remember exactly how that. But I'm fairly certain that if it's not just automatic, it doesn't automatically connect you. That you could just go to the trading. Oh shit, you go to Google and just figure it out. I think it will automatically connect you. But since I've got an account, it won't let me go to that state as though I didn't have one. So I think it's automatic. So anyway, I think you can figure it out, right? So we get paper trading. I would suggest you start with, put 10 grand in here. That's what I did. So I started with 10. You can see I'm sitting at 12.1, right? Got a couple of good trades in the yen on. All right, you're looking here and you're like, okay, that looks interesting. Maybe I want to be a buyer here. All right, well, we come over to this column here, the little up-down arrows. That's going to give you your trading panel. All right, so let's say, for example, that we wanted to be a buyer. So we could do it at the limit, or we could do it at a limit order. Let's do a limit order. Okay, I want to be a buyer. All right, so I'm going to get on the buy side. Now, one of the things that's kind of nice is if you click this, right, you're going to see what the current ask is. Right, you're a buyer. You want to pay attention to the ask. All right, so let's say we want to go 2 ticks above the ask, just to be sure that we get filled, or you might have to do more than that to be sure that you get that fill. Okay, and we're going to use again. I'm going to assume here that this is new. We'll be thinking in increments of 10,000 or the mini size. So let's if every increment is 10,000, let's do it what would essentially be a 2 lot. Right, so that's 20,000. Right, so we can see what the pip value here. That's $1.51 per pip, tick, right? It's referred to as a pip in Forex trading, so, but you can think of it as a tick. So it's $1.51 if you're using 20,000 here, right? The pip value is $1.51. What your trade value is here. Now, let's say we're looking at that and we're going, okay, well, I'm just going to use a sort of a default formula. I'm just going to use 2% of my total account size. Well, my account is sitting here at about a little over 12,000. So if I go here to stop loss, I can see here this is, for whatever reason, I can't even remember why we have this default here. But I could do it a couple of different ways. So I could put 2% here. You see that? So that's going to tell me if I want to risk 2% of my trading balance here. This is an easy way to do it, right? So I can't, it's hard to screw this up. So I know that's going to be $242.73 of risk. That's where my stop is going to be. It's going to tell me the pips, the price, what that's going to equal in dollars, and what percentage of the account is. So if I want to place that, now we'll get to the take profit, but what should not happen, you want to make sure that you've got a stop loss. You could, if the market's not volatile, you could enter at the market and then adjust your stop. But let's just do it this way. So I've got everything teed up. So we're all good here. So I'm on the buy side. I've got a 2% stop loss, and I'm going to just click buy it. Right? So so this is it going in trying to get a fill. Right? So these will start to, they'll clear off, right, as you get a fill. So did we get a fill? All right. So yes, we did get a fill. Right, so we are long here, right? So this is kind of nice. Now you don't need to keep this here. Right, so now we have that right on the chart. Now for whatever reason, the thing starts to move in our favor in this particular trade. You can just grab the stop, move it up. If you want to do that, if I want to modify it, let's modify it. Okay, so all I've done now is change the stop. Right, very simple. Right, I'm just doing it graphically based on, well, I want to get just underneath the 38. It might be something like, you're buying at the 618, it's like front one on the golden zone. You want your stop just a couple of ticks underneath the 65 or the 50. Or we've been through enough examples of how you might approach stop placement here. But a good rule of thumb is keep it you wouldn't want to risk more than 2% of your account in the interest of longevity, and recognizing that the stops are going to be a very real part of your experience. That would be just a good kind of a broad strokes guideline. So I got 2%. Now I've tightened this now to where I have less than 2%. Now I've got a couple of different ways that I can let's get this off, that I can edit that order or tweak it or do anything I want. I also have this little pencil over here. So if I click that little pencil, I can modify it. So let's say that I want to put a take profit on this. Right, so I want to put, when we're going to go up, let's go 100 pips. All right, so I'm looking for, or 95 pips. All right, so I'm going to modify that. All right, so now I'm looking for, there's my profit target. Okay, so I've got entry, stop, profit target right on the chart. Okay, so these eventually, you can click them, but they'll eventually go off. All right, so I can see it down here, right? So I've got, here's my take profit, here's my position, I'm a buyer. Here's my price, here's my profit, here's my stop. Right, so now if I want to back this off for whatever reason, I want to get under the 50, do I want to modify that? It's that easy. Right, let's say I'm thinking, we're going to get to the algo target. So I'm going to go up here, I'm going to modify that. I'm going to move that. It's going to say modify it. Right? It's one click and you're done. Modified. You see, now it's changed down here. Now once that's done, now I don't need that necessarily there. Right? So here's where I'm after. Right? Pretty easy. I mean, it's hard to screw that up. Now, the one thing that you'll want to pay attention to is the time in force. Right? So if you do a day order, you got to be careful about that. You got to check here. You want a good till cancel? Is it a time period or is it just for the day? Right, that's the one thing you want to pay attention to is the time in force. Right, so right now here, I think the default here is to 1 week. Right, so you want to constantly come back here and check this. So if I wanted to say, hey, man, is that profit still there? Well, of course, it's going to be on your chart. You don't have to have it on your chart, by the way. You can in the settings, you can make it so for trading that you don't see those show orders, show positions. You can remove those if you want to. I like to have them on the chart so I know where I am, what's happening. Do I want to adjust? Very, very nice. Okay, so there's a complete suite setup. All right, let's do one more. We got 10 minutes. Okay, fair enough. Okay, that's in. It's done. Okay, so let's go back to our over here. We're looking and say, okay, what else might I look at? Well, I can see here, remember, we want to look for those areas where they're crossing. So right in here, I can see I've got potentially something happening where I've had some crosses right around 0. So I can see, okay, Aussie in blue, Aussie yen. So you can see here the euro and the Aussie are both moving together. The CAD's moving together. So let's try, if I open this up here on a 4-hour. So we've got the Aussie going higher and the Swiss going lower. So Aussie, Swiss. All right, let's look at that. Okay, so here I just happen to have it over here. So here's the Aussie, Swiss. Now, first thing, always, please listen to me here. Always check the daily, because if you don't, here's what happens, right? You bring this up and you're like, oh, okay, this looks good, great, oh, interesting, and you completely lose perspective on where you are in the broader count, right? You absolutely always start with the daily, right? If you want to go more, then go to the weekly, right? There's no shortage of data, right, in Forex. So you must always check the daily. It's just, it's mandatory. Well, I mean, this, I'm about an easy one. Okay, so what do we got here? This is pretty hard to miss. All right, now let's, well, that's fine. All right, so here, and even within it, I can see 1, 2, 3, 4, 5 in the 5th. So you've got beautiful. Again, one more reason. Look how clearly we spot this, just out of curiosity. All right, 'cause I can't resist it. How do we do here? All right, we blew right through. So from the 2 to the 3, we get a little deep here. Interesting. All right, again, not to digress too much, but like we get some wicks down over here. We've got this. These were likely all in play. That's so front run here. Hard to say, right? We got more. You can see this little range here of these prior wicks here. So we come up to it. Prior support becomes the resistance. Down we go. All right. So where are we now? Well, if that's a completed 5. You might be looking there thinking, all right, I'm looking for a move to get to the 50 if this is going to be a completed 5. So maybe I've got some sort of AB going in. So maybe I've got here's an A, I've got an A, that looks like 5 there. So I might have to rethink this. But maybe I've got something like that. Again, I don't want to get too caught up in the technicals. But maybe that's what I'm after right there. So I'd be looking for Aussie strength against Swiss weakness. Right? You see that? Well, now it is worthwhile to go down to some of these lower time frames and say, okay, wait a minute, where are we? Let's see what's just happening down here. Oh, shit, can I do it? I think that's as tight as I can get it. Okay, so here, let me back out here. Let me go to an 8 so you can see where I'm pulling that from. Okay, so I've just used this pivot up here right before it turns down. Right, so I'm looking at that entire range here. Well, look what's happened here, right? 618 to the tick, now 50. So, right, we know what's going on there. Okay, we don't have to wonder about it. We know what that is, right? So these are algos kicking in here. So they start the sell here. It's too strong. They defend here. Rip. Now we're not to target though, right? So they're still in the market pushing for that. So you've got to recognize that. So we know we don't have to wonder about it. We know for sure we've got an algo that's playing the short side here. Now that doesn't mean that they win. That just means we can identify them, right? There's their footprint, right? Clear as a bell. Now, of course, there will be a competing algo on the other side of this. I'm just going to use a major swing. So we know this will be an area. Right? We know this, right? This is just Trade Devil 101, right? We know those are going to be battlegrounds between bulls and bears. All right, so we're just looking here. So Aussie Swiss. So I'm thinking, well, if I go back, let's go, where did I have it? Here, yeah, okay. So Aussie's rising, Swiss is in yellow. Now, by the way, if you ever forget what's what, you can always just go back here and go, because it's slightly different than the way I have it on MT4. If you forget, oh yeah. If you can't see it, sometimes they're right on top of each other, or like Aussie, I don't particularly like that color. It's hard for me to see it. Let's see here if I hit OK. That's not a whole lot better. But you can tweak those colors if you like it. Change it to something that stands out. So Aussie's going up, Swiss is going down. You see that? Swiss is in yellow, Aussie's in blue. So we've just had a cross. Call it, maybe 12 hours ago. It's maybe 12 hours ago. All right, so we have that cross. So we're back here looking at this. All right, Aussie strength. So what that would imply is that I would want to be a buyer here. Aussie strength against Swiss weakness. Well, not so sure. Is this where you want to be a buyer? I know I'm competing against an algo, so this may be a way to eliminate that trade and think, nope, I don't like it. I've got a strong downtrend here. I've got a channel that hasn't broken. I've got potentially now, maybe I like this, but that means it has to get weaker. So note here, right? If I want to get this down here at this buy zone, at this 50, well, this has to stay weak. Well, that's not what I'm seeing here, right? Aussie's rising, Swiss is falling. Right, that would be Aussie rising. Right, it's easier when you can look at them right in the right order here. So that would be bullish, not bearish. So if I want to buy it at this 50, that has to invert. Right, so I need to see that roll over. That's going the wrong direction for that trade. So maybe that's a way that you have eliminated something that you might have been looking at here, because you go over to the chart, you look at it, you check the technicals, see what where's the algo footprint, what's going on? Is there an Elliott count? No, don't like it. But it was a place to start. There's something to look at. What else is here? So I've got stuff to look for things that are going the opposite direction. The Swiss, there was kind of it's a big wick in the Swiss here that's going to distort things a little bit. So we can look here. Here's the euro and the Aussie going the same direction. So there's the yen and the CAD. Let's look at that. Oh shit! I don't want you over there. Get out of there. I want you. Let you gone. Okay, so let's look at the yen CAD. All right, so let's come over here. Let's go JPY, JPY, CAD. Oops, wrong direction. CAD, JPY. I always use Forex.com. That's where I'm going to trade. Okay, so there's the CAD yen. Now remember, right? So you're here. Oh, that looks interesting. Wait. Rule number 1: check the daily. All right, where are we? Do we have a count here? Well, it's again, you're going to see them clear as a bell here. Right, hard to miss that. Right, with even just some rudimentary Elliott trading. Okay, so I've got an impulse. Right, boy, mighty deep retracement. Is that a retracement? Well, technically, right? As long as we stay above that, we still have an internal retracement. This sure looks like sure looks like that's 5 down. Right, so that sure looks like 5. That looks like 3. Maybe something going on down here. We've got something like that, because this 5 hard to miss. Again, same. It's hard to miss them on the dailies. That's why I want you to go there. All right, now before we get to what's underneath here, which we'll get to this in a second. All right, so what do we got? All right, so where do we go with the B wave? Right now, I have not seen this. Right, I'm just going off of what I'm looking at over here. Right, that's what's got me looking over here. Oh, well, that's interesting. I got 5 down. I got a retracement to the 50, and I'm heading down. Looks like I've got some sort of wacky diagonal. Could be done actually as I sit here looking at it. It's 1, 2, 3, 4, 5. Sure would be kind of a wacky one. I can't say I love it. Again, this is just now you're analyzing the market. You're looking for something here. No, that's too steep. So maybe I got to go to a shift. Oh, well, look what we got there. Now I'm kind of tweaking here. Then I'm like, oh, I like this. Now I'm going to tighten it up. Make sure these are spot on, right? As you always have to do with median lines. Get them spot on. Oh, that's interesting. Again, I haven't looked at this. I'm just, okay. So maybe here, right, Canadian strength against yen weakness. Now we go back, let's go back here. Canadian strong, yen weakness. All right, what do we see? Canadian strong, yen weakness. All right, so maybe now we're at the daily, so maybe I want to go down. Let's go down to, let's go to a 3 hour, see what we think there. Is there a count there? Now this we've had this. They've had some big spikes of late. So, but we've had this big spike here. So maybe this is some sort of a. Jesus, what are you going to do with that? You have to go down to the hourly on that. again, I don't want to get too caught up into the analysis here because then we're going to digress too much, and that's not my purpose here. My purpose here is to show you the potential trade. So let's say we're looking at this and we think, oh, okay, well there's an A, the B's going in, and I'm looking for a C down here. And I want to be looking for something, let's come down here. I want to be looking for something at the 50. All right, so that means if I'm looking here, I'm looking for CAD weakness, yen strength. Now, remember, that's the opposite of what we just looked at. I want CAD strength, yen weakness. So we come back here. Do I want this trade? Well, at the moment, you can see it's going straight up. So is this AB? All right, which I guess, let's for the sake of the example, let me zoom in here. All right, so let's say I've decided that this is my A and this is my B going in, and I'm looking for a C down here. So I'm looking to be, let's see, we know that can go as high as the 786. Right, we're through the golden zone. We're in that spot for a B between the 618 and we're up here in the short zone. If we're going to get something here, now again, not to digress too much into the analysis here, but we are in a location where you might anticipate if we're going to get a pivot that you'd be looking for a B wave to come down to the C. Maybe we'll just use the algo target. Maybe that's all we can get out of this. So we're looking for this move right here. All right, so let's look at that. So we want to be a seller. So we're going to go over here, and we want to be a seller. Let's do a limit order. Right, it's usually better, particularly when it's this would be considered not one of the majors. This would be an exotic. So we want to be a seller. So the bid here, we want to go down below the bid. Right, and now you could trade. This is a micro. You could trade 1,000 and be 9 cents a tick. But let's go to 20,000. All right, again, so you got $1.81, $1.81 a tick. All right, so if I want to put a stop loss on this, again, if I want to do 2% of my trading account, right, it's gonna be roughly $1.81 in pip value, right? Percent. So I'm risking $240 on this trade if I'm a seller here. Right, so that's one way to do it. Now let me show you another way to do it. So let me push this off. All right, so let me show you this indicator. Now this is one I had designed for us, right? And I'm gonna share it with you guys. Let me zoom a little bit here. Zoom so we can get this. Okay, so let me make this bigger. All right, so this is an ATR. I guess I got to show you these so you can see them. Right. Okay. So this is you're looking at a histogram of the ATR, of the average true range. So this is really a measure of volatility. Now we're looking at it here on a 1 hour. So if I go to a 4 hour, right, you're going to see slight differences. But here's the key number. Right. So the statistical data would support that if you outside of something crazy like this. So we had an extreme of volatility right here. You can see that. Right, and no real hint that it's coming, but when you see that kind of price action, you at least want to be aware of it, of how extreme that is. Now, it's fairly obvious based on that bar. So you have high volatility here. But if we're looking at this trade and we want to be going into this trade, I want to know what the daily average true range is for this pair. Now, this has a default setting in it. So in yellow, I can see the daily ATR. All right, so that's going to show me that if I come right here, and I can see that if I come right to the edge of it here, it's going to follow your cursor. So it's at 60.57. So essentially 121 pips. So if I come back here and I look at this and I go, all right, I want to be a seller. I want my stop loss to be 2 times the daily ATR. Right, in pip value. Let's see, so let's go back. We're going to sell. We're going to go, well, let's go 3 ticks under the bid. So because we want to get filled. Right, so our pip value currently, we have it set at 2%. Right, that in pips is higher than we need relative to the daily ATR. So I don't need to give it that much room. I can give it less. So I can do it in pips. I can do 120 pips. Right, so, oh shit, let's go back here. I got to do 20,000. Okay, there we go. So I'm going to do 120 pips. Okay, so it's going to be less. So I'm using 2 times the daily ATR. That's at 60, so I'm just doubling it. I'm just rounding to 120, right? So that's going to be 1.8% of my account value with an account value of 12,000 currently. All right, so there we have everything set up. I'm going to use the ATR method, which I recommend, right? This will be 2 times the daily range. I'm going to sell that. Okay, do I get filled? Well, this is, working. It'll tell you when it gets filled. Okay, so it gets filled. These stay up here for a second, and then they'll start to you can click them here, but then they'll start to go away. Yeah, there you go. All right, so let's bring this back down. Now, one thing, you don't necessarily need to keep that daily there, but you can. So you can come up here once you're in that trade. You could take off the daily, and then you just have, sorry, the ATR on that day's range or on that time period. So we're looking here. So if I want to see what the ATR is here, now that's going to be much lower. What I want is the daily ATR. All right, so I have my entry here. I'm short the market here on the assumption that I've got a B. I've got my stop loss up here above the market. All right, I'm risking 2 times the ATR. Now, the highest period of risk when you're first entering a trade is literally in that first 24 hours. So you want, if you're going to be right, you want to see that movement happen relatively quickly. And if you're going to take it overnight, you want to be far enough away from the market so you can't get, well, there is a tendency for some market manipulation here if you're too close to the market. It can happen in a number of different ways. The spread can be widened. It's one of the issues in Forex, particularly if you're in an illiquid market or a market that doesn't have a narrow spread. So we can see right now here, this has got a spread of 3.5 pips. That's relatively high. Typically the euro, which is the most liquid, would have 1, maybe less than 1, 1.2. They're going to be very tight spreads. Whereas here, because it's more of an exotic, we've got a higher spread. So it's 3.5 pips of a spread between the bid and the ask, which you can see here, right? You see that spread. So it's always going to show you here. So that's important to note. What's the spread? Anything beyond 4, 5, certainly you want to use a limit order, right? Because that's going to eat into it. So that's why, preferably, if you can use a limit order, you want to, so you can define this precisely. But if you just go with the market, you can come back to it and do either way, right? You can then just go and say, okay, well, I want 2 times the ATR. I'm going to calculate that. There's my stop. Or if you just want to do 2%, right? So for example, I could kill this stop, right? So now I'm just in the market without a stop. So I could come back down here and say, okay, I'm in that. So here's my CAD yen. So now I'm going to come back here. Well, now I want to modify it. So I want to put a stop loss on it. Right, again, do I want to do it number of pips? Do I want to do 120 or do I want to do 2%? Right, so there's the 2%. Right, they're pretty close. Just so happens, right? So now it takes a minute. It's just showing you this is here working, and then it goes away. All right, so I've got that trade on. I've got my stop. Now maybe I don't want to take profit just yet. I can always add that later. Right, if it starts to move in my favor, how much am I after here? Do I want to, maybe in this case, since it's a 20K trade, maybe I take off 10 at the first algo target, right? Maybe another 10 at the second, or I'm going for the 50%. So I'm going to let the rest of it run. And I can modify, I can drag that stop down. I want to drag it down. Okay, I dragged it down. Okay, now I'm closer to that 2 times the ATR, the daily ATR. Right, it's really, really good. It's so easy the way they do it. Now compare that to the trade in crypto. I think you're going to find this very, very manageable and very easy to do. It's very easy, right? And you've got all your history, you got orders, you got history, your account summary, trading journal, all of this down here, all available to you. All right, well, that's half an hour. Okay, let me wrap there. I think if you just come in here and fuss with it and play with it in paper trading, right, emphasis on paper trading, you'll find this very easy to use. All right, guys? All right, we'll be back with more.